good day to all. Sam here with you on Thursday, August 30th. We're kind of midday here. So as it's a Thursday, we're going to look at traditional assets here. So as we usually do, we will poll our members, let them pick what gets analyzed here in video. Now, first up here by request was a look at the dollar to the Swiss franc. Now, when you first, this is a daily chart here. When you first bring this up, it really just looks like we've got a pretty substantial wall of resistance up here, and we're, you call it range bound here. Now we'll dig into the hard right edge. I actually think for this, as I will often tell you, with foreign exchange, I think it's really worthwhile to always go out to the very longer term. So I'll always go and start looking at the 3-day. So as I look at this, it's not so much about trying to dig a count out here. It's trying to figure out why are we running into this wall of resistance here. So just a quick, simple look at it here. This sure looks like I've got, this would be ABC. It looks like I've got a WXY going down here. So this looks like the start of it. Looks like an important pivot. And sure enough, so you wonder, why are we running into this resistance up here? Well, we're right into the golden zone. Once, twice, 3 times. Maybe there's another push for it. So just so you, excuse me, just so you know what you're running into, obviously that's significant to the market. So that means that for whatever reasons, algos are using that and they've got a target down here. All right, so if this is going to hold, they're just going to stay short until we get to that level. Now, if this breaks, then they'll look at some alternates, and I'll show you what they would likely do here. So given that, we know we've got this big wall of resistance up here. So once we've got that established, so at least we understand where we are in the longer time frames. Well, then if we go down, let's go down to the 3-hour. See if we can get anything to help us here. Well, looking at the 3-hour here, so as I was showing it here, let's see if I can show this to you. So coming down here, this sure looks like I have a candidate here for an A wave, some sort of, if that's 1, 2, 3, 4, 5. So it looks like I've got a good clean 5 into my A. I'd have to go A, B, C into my B here. I think that's technical. As I recall, we come right here. Yeah, we're getting, it's a little sloppy here up at the top here. We get a couple of pivots through the 65, but then look, we come right down to target. So a little sloppy at the top. Could be, FX, they're giving it a little more cushion. I can't tell you for sure, but what you can do is, excuse me, you can look at this and think, well, if they were stopped there, then they would just take the next 50. So we can look here, and it sure looks to me like they ran into this. So that's what they would have done. Right, so that's where we get our one wave. So on the assumption that they revert, well, not reverse as in go long, but they exit the market here on the break of the 65, they'll draw swing low, swing high, they'll take the next 50, and you can see what happened here. But that target is unrealized, right? So this swing has a target here, they don't get there, so then it falls over again, they're stopped out yet again. So, right, remember algos, they'll keep playing it until they get on the right side of it. So if they're stopped out here, now they're looking for the short, and it doesn't look like we have much to work with here. But now as I look at this, we do have this 50 here from swing low, and I can see I've got a fairly clean 5-wave structure coming down. So if this is an A, this is a B, and we're coming 1, 2, 3, 4, 5, well, I've potentially now completed a C wave here. So what's next? Well, this gets a little tricky here. So we have a lot of chop coming in off of this low. Hang on one second. I'm back, sorry. So looking off of that low, let's dig in here a little bit. This was a little bit tricky here. So you have this pattern here. So you've got to measure this. Now, we can look here and see that, well, the extension is in the 1. So on the assumption that we're playing this as a diagonal, given the overlap here. So I can get an A, B, C into my 1. I come down for the 2. It looks like that's fairly technical. So if that's my 1, we come 50 to the tick. All right, so do you see it here? Right, algos get it. They get it here. They've actually gotten second target here, but this looks like we've got a second one here. So this is clear, right? Algos all over FX. So that's clear algo play. So we know what happened there. But for us, trying to get an Elliott count on it, try and get in behind them and figure out what they're doing next. we got to get some sort of a pivot here. Well, we can play this as a diagonal, and you note here the extension's in the 1. All right, so remember, 3 doesn't have to be the longest, just can't be the shortest. So just in checking this, we can take the length of the third, project from the 4, and you can see we don't make 100%. So 5 would be the shortest here, so the extension's in the 1, down for the 2, A, B, C into the 3, down for the 4, and in a diagonal, we're always looking for that relationship between the start of the 1, right, and the pivot of the 3. Well, we get a little skinny here. We don't make what you'd look for is at least the 38. For whatever reason, they hold it there. Then ultimately, we don't get any action here, so it makes me think, well, they must have used this here. So if we go from maybe the 2 to the 3, and so eventually you're going to find it, right? So they get it again. So they're doing just fine here, making money. So that looks to me like we go 1, 2. Right, in the larger degree here, but then following that, this does not look like 3, so it looks like we go 1, 2, 3, 4, 5 into the 1 of the third relative to the white degree. So if that's 1, 2, well, first thing we've got to accommodate for this shallow 2, right? So remember, we're 10 to 12% of wave 2s will be that shallow here. We just barely make the, well, potentially that's a front run on the 38, but we do get target here. So I think that's not unreasonable to consider this my 2. And then because I get this 5-wave structure, that suggests to me more likely the 1 of the third rather than 1, 2, 3. So if that's the 1 of the third, well, it looks like we go 1, 2, and up for the 3. So if we measure it, just trying to use the ratios to help guide us through the count. If that's 1 and that's 2, where am I looking for my third? Right, somewhere between the 1618 and the 175. Where do we go? We get just a couple of ticks past the 1618. So that makes me lean into that as my third. Well, can I get the subdivision that I need? Well, we can. We have to allow for this skinny little 4 here, but I can go 1, 2. Now looking again, same thing, same idea. Let this guide you through analyzing and trying to determine the wave structure. Well, what do we do again? Right, so right to the hot box where we anticipate the third. So we go from 1, 2 now with the benefit now of this, because we can now measure completed cycles, but this helps us identify the count. Say, is this a good clean 3? Well, I've got 1, 2, 3, both perfectly technical, both going exactly to where you'd anticipate the third. That's where we get the little baby retracement for a 4, but it plays, gives us a 3, 4, 5. So I've got the subdivision. I get a clean, albeit with a shallow 4, I get a clean impulse into my third. So I've got a 1, 2, 3. Looks like I go A, B, C down into my 4, and then I finish with this diagonal. So it looks like, excuse me, if this is going 2, 3, let me scrunch this back up. So this looks like a fail. So we double top here, so we know that's going to be a failed target. So if I look from the 2 to the 3 high, well, 38, we get a little through the 38, between 38 and the 50, prime zone for a 5, unrealized target, right? So if they're buying it here, they do not hit target. So remember, algos don't get it every time. They eventually will find it, and they'll get on the right side of it. That's what they do. So we as Elliott traders look at that and go, unrealized target. But I get a completed 5-wave count into a double top. Now, we know that's not uncommon. We actually do get a new high here, but I would call that a double top. And I've got this subdivision here, so I get a leading diagonal into my A wave here. So 1, 2, 3, 4, overlapping the 1. I think that was technical if I recall here. So always in a diagonal, we're looking for the start of the 1 through the pivot of the 3. Oh, a little sloppy here as well. It gets a tick or 2 through. Yeah, maybe they're giving it a little more room here. So they get a ticker 2 through, but they get target here, and then note this, go back golden zone, gets it again. So that would suggest to me that this is a reasonable pivot. And then we know from where we started on the 3-day that every time we've bumped into this range up here, what we're bumping into is the longer term 618, right? We went right into that golden zone, as I showed you from the longer term chart. So we know there's stiff technical resistance up here. So if that's 1, 2, 3, 4, 5, and we've completed some sort of an impulsive structure, well, we're looking for the ABC. Well, just business as usual. We would just take the swing low through our pivot high. What are we looking for? We're looking for the 50, right? That's our minimum qualifier for our second, so this is not unreasonable. We'd come down here. You know, so if we're going to allow for this to on the assumption that this is a completed five-wave structure here, ABC, it looks to me like we might have a little bit more down here. So just looking here, we know an A wave here to the B. Looks like we double top there. So 127, not uncommon. Look what's right down here. All right, so potentially now this would be a candidate for a third. All right, so just like we look for the ABC, for the 1, 2, 3 in that location, if we're going to go beyond the 272, next pivot you'd be looking for is the 1618175 for the AB, for the relationship of the C relative to the length of the A. So we project from the B pivot. So if we come down here and get into this little hot box, well, that's an ideal spot for our second. So we'd be longer term, we'd be looking to trade it this way. So this would be the 1. Potentially now we're coming in for the 2, 3, 4, and 5. Now those are just placeholders. Let's get this degree up to where it would make sense. We can go minuet. That would work. So we'd be in a completed one wave. All right, so let's bring this all down here and scrunch it up a bit. So that would be, these would all be potentially now much higher. Right, if we're going to get a true Elliott count out of this, well, we know, right, this market has been very technical. Most of FX is always very technical. So if this, we know this is a good placeholder. This is going to be close to our 1618175. That's a good shorthand for that relationship. If we're going to come down here and get a tap of the 50 and get into that little hot box here for that location, well, that's pretty juicy upside if we're going to get there. Now, I'm on a 3-hour chart here. So what's the first thing I'm going to do? I'm going to start looking for if that's going to complete as a 1. And I'm going to come down here. Now, I'm hypothetical here. I don't know that I'm getting there. But if I were to get there, well, this is kind of interesting here. So we get this potentially. So we get a potential corner pocket trade right there. Right? Nothing more than potential for it. So if we're going to get that clean, we come down to the 50 here, and we get this algo participation. So we have the technical ABC relationship, the high probability zone for my second. But remember, now, prime zone for a second is anywhere between the 50 and the 618. So we certainly could go deeper. So I'm drawing this hypothetically here. I could easily come down here. We don't know where that, I could come down here. So we're just looking for a reaction there as a potential trade. But that would set us up for a potential corner pocket, albeit a corner, not a golden, just a corner pocket at the 50 with a target here. Now we'd have median line target as well as an algo target, not necessarily a wave 3 target, right? Our wave 3 would be way up here. It might be like that if we're going to maintain that structure. Now remember, the caveat here is if we get a pivot here that holds, that's what maintains that 80% probability. So if we get a reaction here, and we start to move away, well, then now you have a true setup for a corner pocket, right? So if that pivot holds, emphasis word if that pivot holds, then we have 80% probability of making the median line. It's the best odds in trading. I've shown it hundreds of times. So that's one to pay attention to. So you see the confluence that we have here? So we have the pattern that's completed. We have an algo swing set up with a target. We've got a potential median line play here for a corner pocket. Again, not knowing if we're going to pivot here, but that being a candidate here for a potential turn at the 50 is assuming we get some algo participation here, which I can assure you there'll be algo participation. Now, whether it holds remains to be seen. We don't know for sure. Again, there's no certainty here. What I can tell you is that from a swing low to a swing high, there will be algorithmic participation there. So it doesn't necessarily mean that it pivots there. It just means that's where they'll start buying it. They'll defend it down to the 618. If they get on the other side of the 65, then they'll reverse, not by going short there, but they'll just draw the next swing high to swing low, and they'll take the next 50. So they'd be then looking for something to come up here like this. So if they were to get stopped out here, then we draw it like this. So let's say we break the 65, we go to the 2618 for the C. Well, then they're going to pull this as the next 50 with this as their target. Do you see that? So let me take that off. So just to make that point, if we're going to break here there, and we were going to go down to the 2618, so this all would be stopped out. This all gets right. We would still certainly, if we were to go that far, well, think about it. If we were to go that far, do we still have a candidate for a wave 2? Well, if we go that far, we're definitely still a candidate for a wave 2. We know a wave 2 can easily go as far as the 786. This is the high probability zone. Doesn't mean it can't go that far. So if it were to go that far, again, I'm using this example, using the 2618. So if this went down here and we had an extension here in the C and we went to the 2618, breaking the 65. And again, I'm just hypothetical here. If we pivot here, this is what they're going to do. They're going to take the next 50 looking for that target. That's all. The point I'm trying to make here is look for the next 50. Where's their target? Always. What did the algos do last? Can we get an Elliott count to fit around that? And if so, where are the probability zones? Can we get in sync with what they did last and the count that we're currently working? Right? It's not that you force the count to fit the algos, is that you read the count, then look at what the algos did last. So as we come swing high to swing low, this is a very strong candidate for a C wave and a 2 wave. So if we get a pivot there, there's a trade setting up. Right? Doesn't mean it holds, but it's certainly there. So we have some structural support here, so we can see we get a little bit of structure here potentially now. You know, it depends on where you draw it here, but you've got some prior pivots, resistance could potentially now, even if I draw it up to this 1 wave here. So if we were to come here for the 2, you've got this zone here potentially of some support. Looking at the oscillators here, so these are all volume based here. So as we come down here, we're getting into some, you know, there's not a lot here. If I change that template, we can go to, we'll go here and look at. So we're, you know, here's your 3. So this is what we'd anticipate. You'd look for the momentum be strongest here in the C wave here. So if we're going to get a good 2 wave, that's not unreasonable. Volume's not giving me a lot to work with here. So this an area here I'd certainly be watching. So here's what I would do. I would be alerting. I'd want to know before I get to that 1618. So, you know, just a little heads up if we're coming down here. So I'm watching that. Now, again, here's the thing with FX. So if you had a little alert here, you know, then you got to deal with the possibility that you get the, well, if you're in the States, right? If you have to deal with the possibility you get the push in the overnight. So I wouldn't just leave an order sitting there. I wouldn't do that myself, but I would certainly be looking. So so let's say, for example, we get this and that happens, you know, it's 2 in the morning here for me in Texas when London opens, and we get a little reaction off of that. So we come down, they tap the 50, we get a little that's all I would wait for. And then I would just take this, looking for that. Right? So if you miss it, it's not, you know, don't let the FOMO kick in. Don't chase it. So, I mean, you could go down, well, I'm on a 3 hour here, you go down to the 60-minute. So maybe you can catch the 2 into the 3 or the 4 into the 5, knowing that the ABC will come, because if this is going to be a 2, we need to have an impulse in that 3 if we're going higher. Right? So that's the other play. That's the more conservative play. Wait for the reaction here. Do we come off of this with a motive wave? Right? That could just be the 1 wave of the 3rd wave. Could be the 1 wave of the 1 wave of the 3rd. You just don't know. But here's the trade. So this is always the safer way to do it, because if you're trading here, you know right where you're out. Right? If you can buy this little ABC here, well, the assumption is the low is in. So your stop's sitting right underneath the 50. If it comes down, breaks it, well, you're out. Maybe we're going down here. You don't want to ride it down here. Oh, maybe we're going to the 786. That could still be the 2 down here and still be perfectly valid, technically speaking, from an Elliott perspective. Excuse me, from an Elliott perspective, still have a solid 2, and that still could be going. So you don't want to ride this down. You don't want to go, oh, a 2's coming. Oh, it'll be the 618. Oh, it'll be the 786. Oh, maybe it's going to be the 887. Right? That's a knockout blow. Right? Don't let that happen to you. Just take the stop here. Remember, if you're entering a trade like that, your assumption is the pivot is in. So you don't want to rationalize it. Oh, I think they're going to the 618. You want to get out and wait and then do the exact same thing down here, except this would be here. So now you're trading this on the assumption the low is in. Now you take the 2 wave, so you'd be trading this as 1, 2 on the assumption the pivot is in. If it comes down, you take your stop again. Right? That's just the reality of it. That's you got to be disciplined about where you're out. Right? So this jab, that's going to hurt. Right? No reason to do it. That's just lack of discipline. It's an unwillingness to people hate to. And listen, I hate to take a stop. But I just know it's part of the trading business. So when I take a stop, I always say, if I'm stopped out here, stop just doing its job, keeping me out of trouble. So I don't move those stops. If I'm moving a stop, I'm moving it up to protect, not to move it down to give it more room. Oh, maybe we're going to 786. No, don't need to do that. That's this. So it's the second you move the stop. So if your stop were here, the second you back it off, thinking, oh, maybe we're going down to the 2618, maybe we're going to 786. The second you reach for your mouse and move that stop, that's the first mistake. Markets have an unbelievable way of punishing mistakes. Right? So the second you move it, now maybe you get away with it. Let's say you do it, you move it, I'm going to put it under the 2618 because I don't want to get stopped out. Because it's more important to me that I'm right because my ego is involved now. So, I've been there. I'm telling you, this is the mistake. The second you move for it. Now, if you get away from it, if you get away with it, let's say this holds it, and then you get up and you're like, look how smart I am. I gave that enough room. I got my 2. Boom. All you've done is just reinforce a bad habit. Next time you're going to do the same thing because I remember the last time in that Swiss trade, I backed that off a little bit and I ended up getting a winner. So I'm just going to back it off again. Yet again, the mistake. Right now, you've reinforced the bad habit, and one of these times you'll wake up to that. I'm telling you, it's not worth it. I've done it. I say that I say that from experience because I've been that guy going, God damn it, I do not. Oh, I know what's happening. I don't want to get stopped out. I'm giving that plenty of room. That's the mistake that crushes your account. You just can't do it. Take the stop. Stop doing its job. That's what I say. Oh, it stopped out. Stop just doing its job. Keeping me out of trouble. Give it a positive reinforcement, not a negative. Not the mother stopping me out. I know they're scared. They're running stops. These that woulda, shoulda, coulda, all that stuff. Get it out of your mind. Stop is just doing its job. Keeping me out of trouble. Keeping me from doing something dumb that can really blow up my account. Take the stop. I'll take 5 stops in a row, no problem. If I get that again, I will pull the trigger because I know. See, that's the funny thing, right? So if you 5 stops in a row, God damn, man, I can't. I'm gun shy. It's not taking it the next time that's the mistake. What does the market do? It punishes mistakes. I guarantee you that's the one that'll run. It's the one that you're hesitant on because you took 5 stops in a row. That's the one that will go all the way. And now you're sitting there going, mother. And now you're back to, I knew that was a 2. I knew that was going. I coulda. I shoulda. It's just it sets up just a very negative cycle in your mind. So it's discipline. You got to do the same thing every time. Every day. It's always the same thing. Otherwise, if you're not doing that, well, then what's the point of studying this methodology? If you're not going to be disciplined and take the same thing over and over, well, now you're thinking, oh, I don't know, maybe let me try maybe a moving average crossover. Oh, I saw something about a Gann square might be interesting. Oh, maybe I'll work with some other, name your system. You just got to pick something and then maintain the discipline. That's what determines success. Look, you're not into Elliott Wave. That's fine. Pick something and maintain the discipline, but don't be doing stuff like that. I promise you, I have done it more times than I care to admit. Way more times. Right? I don't do it anymore. Right? You got to have rules. Got to have discipline. If you have to stick it on your monitor and say, I will not move a stop. Whatever the rules are that you need to reinforce good habits, if you have to writing them down, that's the first step. But if you need to keep it on your monitor right next to your mouse, read it every morning before you even consider taking a trade. Reread those rules to yourself. I will not. I do not. I will. Right? Positive reinforcement. Right? That's advice only because I've been that guy way too many times, right? So eventually you'll learn it, right? You can take my word for it now, or you can just experience it like I did, right? I know what's happening. No, you don't. All right, guys, I'll be back with one more later.